So, given the volatility that we've seen over the past few days in the market, I thought I'd just give a quick brief market update, particularly focusing on Bitcoin. So, the market opportunity, as we know, it moves in quite large waves and cycles. That's definitely intact. I think the adoption continues unabated. I think some of the waves have been reasonably thin in terms of social media companies, etc., built on top of a thin protocol, which is the internet, whereas the blockchain is going to essentially underpin the transfer of all real world assets online. So I think we're seeing the continued adoption by banks, by institutions, by governments, by sovereigns. And if we take a look at, what was originally a lot of headwinds in the past are now tailwinds in terms of regulatory support, in terms of, the largest financial institutions in the world like BlackRock, Vanguard, Charles Schwab, Morgan Stanley, JP Morgan, banks looking to offer this to both their retail and corporate clients. And Bitcoin now being recognized as a form of collateral. So, we can see a new underpin in terms of digital asset treasuries that will enable further lending and further product development. I think from my point of view, there's definitely a drive towards both corporate and sovereign adoption. And I don't think this has been factored in. So I think the macro is still very much intact. The price action is being, quite quite startling over the past few weeks, given that we touched a high of 125, 126,000 less than a month ago. But I don't think this has got anything to do with the micro of the system. In other words, this is not Bitcoin or crypto specific. This is a reduction in liquidity. It's a liquidity driven pullback. And what does this mean? So number one, the global macro monetary outlook is very positive. We're at the beginning of a rate cutting cycle, and you've seen, the money supply in terms of M2 continue to climb. So this bodes well for crypto and other long duration assets in the, call it in the medium to longer term. In the short term, however, we have this unfortunate shutdown in the US, on the government spending side. So they're still taking receipts, but they're not pushing the money back into the system. So they've been building up quite a large deposit balance. So they've continued to grow the treasury balances, and that at some point is gonna flow back into the system. And when that happens, it'll be like a complete wave of liquidity coming into the system. So I'm still very confident of the longer term outlook. I'm still confident the cycle's intact. I think Bitcoin is still very under-owned relative to gold and other assets. And I think from my perspective, as spoken about earlier, the global macro supportive with beginning of a rate cutting cycle, liquidity supportive, both government in states and institutions are all supportive. And the technology is improving in leaps and bounds with the advent and the likes of AI and others. Plus the systematic risks in the contagion in terms of counterparty and credit risks have been addressed in the last correction, last bear market, should we call it, in 2022. From my perspective, we look to continue to grow your Bitcoin holdings by generating additional yield or actual physical Bitcoin on a monthly basis. So we continue to compound that. And the thesis is that we're not sure where the Bitcoin price will be, but it should be up and to the right, in the next sort of 5 years. I'm comfortable with a 350 to 500,000 price target by 2030. And if we've managed to increase your Bitcoin holdings by between 30 and 50% per annum between now and then, one Bitcoin today would be as much as five Bitcoin by 2030, and the price is 3x. So you're looking at 10 to 15x as a return. So thanks for listening. Stay strong, and hopefully we'll have a better update in the days to come, as I'm sure the price will rebound from here once liquidity flows again. Cheers.